RBI has recently informed the financial institutions in order to grant a moratorium of 3 months for all their borrowers on EMIs, that is of course equated monthly installments. This is coming in because of the existing lockdown in the country and in order to cut down on the liquidity issues that borrowers are facing. According to the RBI circular, 3 months of moratorium is something that the borrowers can opt for if they have loans that are due from March 1st and between until May 31st. Well, there are 3 focus points according to this circular that we have picked up. One, that what happens to the whole tenure of if these deferred payments are pushed by 3 months? Will the 90-month loan now become a 93-month loan? Second, what happens with the additional interest charge that is being put? Is there any chance of a waiver? Though RBI has mentioned this is not a waiver but an additional interest that consumers will have to pay if they have to opt for this moratorium. And third, is there any relief measure by bank expected? We speak with the former President of ICAI, Ved Jain, who shares with us insights into this and answers all these questions.
See, what I understand is that looking to this lockdown period, RBI has given a moratorium for 3 months. And what happens normally is that when you give a moratorium like this, so that this payment gets extended over the, if you have a say 90 months or 96 months or the term loan EMI. Now this will get spread over to the last 3 months. So it gets extended to 90 to 93 months. Now your question will be that how do we recalculate EMI or do we rework it out? That's the question, I believe, because the period gets extended, then you are required to pay the interest for that part.
Right.
I believe that's the question your question is.
Yes, sir.
Frankly speaking, RBI circular does not give any clarity on this issue because it is a principle-based circular. So the nitty-gritties have to be worked out by individual banks. It's an instruction given by the RBI to the bank that please do not consider anybody in default, that in case a person is not able to make the EMI, pay the EMI for the month of say April, May, June, that's a moratorium which has been given for that purpose. Now what happens is that in many cases there will be people who will pay regularly. They may not like to default, they may not like to postpone it. There may be many who may pay 1 or 2 installments, there may not be paid also. So what will happen is, I am of the view is that whatever is the default or whatever is the delay, it will get adjusted in the last payment, not before that. It is not going to be worked out, I say, that they will be reworking in the month of July or August, the installment will go up like this. I don't believe, then it is not really a moratorium that I believe that. So.
Right. Sir, like you have mentioned, of course, that, individual banks at the end of the day are the one that are going to take care of this. But isn't it somewhere unfair to the consumers because it's an additional interest on these EMIs that people will have to pay? So I am guessing that there is no waiver, but rather an additional charge, is it?
I don't think so. You see, just try to understand how the commercial world works. See, these banks are the commercial institutions. They have taken deposits from the people who have customers or the client in saving account or in fixed deposit accounts. And whatever the money they have taken, they have advanced to the borrowers who have taken the money from them. Now, considering this lockdown and the period, there is an issue of a fund flow. It's not that people do not have the capacity to pay. It's an issue, let's say, where the fund flow crisis. I do not have the money, but I intend to pay, I will pay it as and when it comes to me.
Right.
So it is a deferment which is being done. It's not a waiver. And when you do deferment, obviously during that period you are getting benefited because you are not paying anything out of it. So that's why interest has to be paid. And similar issue has come up in tax also. You will see in taxation also there is a circular and ordinance that they have extended the period for making payment.
Right.
And they have said, but you have to pay the interest. We will not consider you in default. We will not levy any penalty for that. We will not take any further action, but you are liable to pay interest. Now I take it otherwise in a commercial world. If I say nothing will happen and interest will not be paid, then nobody will like to pay even for a person who has a capacity to pay.
Right, sir. So one last question. Can there be any possibility of banks coming up with release policies? Has this ever happened before in situation like these?
Which policy? What relief?
A release policy during moratorium for the consumers in order to probably send across a waiver or not collect the particular additional interest.
No, I don't think it is possible. Banks are a commercial institution, and frankly speaking, banks are the trustee of the depositors. They cannot waive off in the manner debate. But in particular cases, whenever there is default, etc., there have been cases where banks have been writing it off as NPA when the loan is not recoverable for one reason or the other. So that will be on individual case-to-case basis. If somebody is not able to pay that, bank may write it off later on. But it cannot be a matter of policy.
Right, sir. Thank you so much, sir, for speaking with us.